You know, I guess the question in reply to the idea, I have no question that NVIDIA is going to be a great company for a long time to come. But it has already had that generational moment, it would seem to me. So how do you see it moving multiples higher from here, generationally, I suppose?
Tyler, let me actually tell you a story first.
Sure.
You know, the first commercial internet service started in the US in 1989. Amazon started in 94, Google in 98, and Meta in 2004. The point here is that, you know, you don't just have 1 or 2 year technology cycles when you are investing in these real big changes to the technological infrastructure. And we think generative AI is one of those really big technological changes that is going to take time to play out. It is true that it is insanely computationally intensive. You need a very strong linkage between the silicon, the system, the software, the developers. They all need to come together. But this is not something that will just start and end in 1 or 2 years. And specific to NVIDIA, in the last 2 weeks, we had the chance to meet with, we had the chance to interact with and listen to a number of companies in the supply chain to their competitors. And what is coming out very loud and clear is that the opportunity is much larger, their competitive position is much stronger. And then finally, when I look at the stock, right, we have a stock that is trading less than 1 times earnings growth. And if you were to take an average of the other so-called Max 7, they are trading at 1.9 times their average earnings growth for next year. That is why we think that we are in front of a large opportunity, the company is executing well, and the valuation is very compelling.
Throughout the artificial intelligence AI boom, NVIDIA has been delivering disproportionate growth, with quarterly earnings skyrocketing into the triple digits. The company has an 80% market share in AI chips, but this isn't the only factor contributing to its success. Rather, NVIDIA's profits have skyrocketed as a result of its creation of a whole range of AI services and solutions, which have made it the preferred choice for any business starting an AI project. Over the last 5 years, this has helped the stock rise an incredible 2,700%, and the trend is still going strong as the company is on track to gain more than 170% this year. Investors are concerned about whether NVIDIA can maintain the rate of growth or if its periods of greatest growth are over, despite the company's outstanding earnings and stock performance. Jensen Huang, the CEO of NVIDIA, recently handed investors billion-dollar news, giving them cause for optimism. Let's examine the specifics. As previously noted, NVIDIA's graphics processing units, GPUs, laid the foundation for its rise to prominence in AI. The business discovered that the GPU's capacity to handle numerous tasks at once made it perfect for a wide range of other applications, including artificial intelligence. Originally, these potent chips were used in the video game industry. Even though NVIDIA's revenue from the gaming industry increased by 16% in the most recent quarter, the company still supplies GPUs to this sector, but AI has surpassed it to become its largest business. Data center revenue, which includes AI products and services, jumped to a record $26.3 billion during the quarter, accounting for 87% of overall sales. Additionally, the company's current total quarterly sales exceeds its yearly revenue from the most recent fiscal year, 2023. However, investors might now doubt NVIDIA's capacity to continue generating triple-digit sales growth. After all, even for a highly inventive company, earnings growth typically doesn't last forever. Additionally, NVIDIA expects its sales to rise by double digits over the previous year in the upcoming quarter. Let's move on to the latest billion-dollar announcement made by CEO Jensen Huang. It has to do with modernizing outdated computer systems and data centers, which is a major trend in the field of computers and artificial intelligence at the moment. Huang claimed in an interview podcast that we have only invested $150 billion toward updating the $1 trillion worth of outdated systems in the globe. This implies that NVIDIA has billions of dollars in business ahead of it, which should result in substantial earnings growth and possibly even explosive stock performance. As previously said, this does not imply that profits would increase by triple digits each quarter. However, here's why that's acceptable. Comparing periods are getting harder, as evidenced by NVIDIA's already impressive earnings figures this year. Therefore, it's critical to take into account both the company's real earnings level and its gross margin, which is very broad for NVIDIA at over 70%, as well as the growth data. And when we do this, NVIDIA's current state and future prospects appear to be very promising. Furthermore, it's crucial to keep in mind that NVIDIA is in a strong position to profit as computing systems evolve due to its current supremacy in the field of artificial intelligence and its commitment to innovation, which includes updating its GPUs on a yearly basis. This indicates that NVIDIA's heyday is not over yet. Rather, it may continue to be such for a very long time to come. Because of this, now is a great opportunity to invest in NVIDIA stock, which is priced fairly at 47x projected earnings forecasts, given the company's history, prospects, and market position. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel, as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
We've gotten some mixed signals, right, from ASML, from TSMC. You've also got potential competition, I guess, from Cerebras here. Is the glory run over for NVIDIA?
No, I think we're still in the early innings for NVIDIA. NVIDIA clearly is capturing the bulk of the value capture in the sector and industry. We were very excited about NVIDIA. I think you'll see NVIDIA at $150 between now and the end of the year at some point. The hyperscalers, Meta, Google, Microsoft, and Amazon have each independently said they intend to spend $50 to $100 billion on GPU compute. The primary beneficiary of that is going to be NVIDIA. OpenAI just raised $6 billion. A significant portion of that spend will go to GPU chips. NVIDIA is really in a class of its own. It doesn't have a close competitor, not AMD, certainly not Intel.
Ram, do you think it's going to be the first end to reach $4 trillion?
Yes, there's no question about it. We made a call earlier this year that NVIDIA would be the most valuable company in the world. It achieved that milestone yesterday. And the demand for GPU chips is strong. And seeing enterprises start to get some ROI on it from the early adopters. Meta seeing ROI on their CapEx spend. So we think NVIDIA's got plenty of room to grow from here.
So thinking of the Mag 7 names, which is the AI winner for you?
NVIDIA is the AI winner. I would say Google and Meta also are AI winners at the application layer because they have data, right? Google has YouTube, which they can train on. OpenAI allegedly was training on the Google YouTube data. Google can enforce upon those IP rights if they choose to. Meta also has data from user-generated videos they can train on. They've also got an incredible AI team led by Jan LeCun. And crucially, they both also have distribution. They have billions of users. OpenAI needs to grow their user base, and they can finance their CapEx spending. They can finance their GPU purchases, whereas OpenAI needs to raise money from private markets or from their parent, Microsoft. And Microsoft has been pulling back on their CapEx spending because it's been hurting their margins. You can see Microsoft's actually lagging year-to-date the S&P.
On June 18, 2024, NVIDIA crossed the $3 trillion milestone, and by the end of August 2024, it had fallen just short of $3 trillion. After Apple, NVIDIA is currently the second largest listed firm in the United States in terms of market capitalization. By mid-2023, NVIDIA had surpassed $1 trillion in value, surpassing both Amazon and Alphabet, the parent company of Google. The company's market value grew from $1 trillion to $2 trillion in February 2024 in just 9 months. And it only took 3 months to reach $3 trillion in June 2024. The stock of NVIDIA has fluctuated. NVIDIA's stock went down as much as 5% following its 2024 second quarter results announcement, despite the company's outstanding growth figures. Because of the strong demand for its GPUs, which are essential for AI development, NVIDIA's shares closed at an all-time high of $138.07 on October 14, 2024. Blackwell, NVIDIA's newest processor, is so popular that it can be reserved up to a year in advance. It took some time. For NVIDIA to gain popularity, 2022 proved to be a challenging year for the IT sector. In spite of tech layoffs, it began to recover in 2023. One of the primary forces for its recovery is generative AI, and the stock market is beginning to exhibit indications of this recovery. Tech equities make up a large portion of the NASDAQ index, which ended 2023 up 43%. The tech bull market, which is a period of stock exchange boom, was brought on by the emergence of generative AI. The Magnificent Seven, which consists of Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla, is the elite club of tech stocks. In 2023, the stocks of the Magnificent Seven companies increased by an average of 111%, while Nvidia saw a 239% increase. After completing a 10-for-1 stock split on June 7, 2024, Nvidia's stock price will drop from $1,200 to about $120. On June 10, 2024, the shares will start trading at the split-adjusted rates. To make its stock more available to investors and employees, Nvidia is dividing it up. The company's total value won't alter as a result of this split. This implies that 9 additional shares will be distributed to stockholders who held shares prior to the split. Investors will eventually find it simpler to obtain shares as a result of this declining stock price. Despite the stock market's daily fluctuations, investors are paying attention to this expansion and speculating about how much the demand for AI might propel the IT sector in 2024. One of the biggest manufacturers of GPUs worldwide is Nvidia. GPUs are semiconductors or computer circuits that use mathematical calculations to produce graphics and visuals. On a PC or smartphone, the GPU controls and accelerates graphic workloads and shows visual material. As AI began to gain traction and attention in 2023, NVIDIA's earnings results consistently surpassed projections. The enormous numbers required to train generative AI algorithms like ChatGPT and Gemini can be used and processed by NVIDIA's sophisticated CPUs. NVIDIA only grew larger as demand surged because it dominated this market prior to the growing need for AI. NVIDIA's fiscal second quarter ended July 28, 2024, brought in $30 billion. This revenue was up 152% from a year ago and up 15% from the preceding quarter. At $26.3 billion, the company's quarterly data center sales set a record, climbing 154% from the prior year and 16% from the preceding quarter. To put that in context, businesses like Apple and Microsoft are investing in AI, while NVIDIA is profiting from the technology by manufacturing the processors that power it. Companies require technology to handle the AI wave's high energy demands, but the metaverse, gaming, and spatial computing also require these cutting-edge CPUs. As technology develops further, NVIDIA also produces chips for automobiles. One of the main reasons for NVIDIA's success is the development of generative AI. Other factors, meanwhile, contributed to the notable rise in NVIDIA's stock price. 1. Supercomputers' ascent. Supercomputers are powered by NVIDIA's CPUs because of the vast volumes of data required for this cutting-edge technology. Companies like Meta, with its AI research supercluster computer, use supercomputing technology to train sophisticated AI models. Additionally, Tesla is beginning to develop a supercomputer with an AI focus for its cars. 2. Insistence on generative AI. With every new system being accepted, NVIDIA is well positioned to thrive as the demand for generative AI shows no signs of slowing down. According to Bloomberg Intelligence, the AI sector is anticipated to expand at a compound annual growth rate of 42% over the next 10 years. By 2032, the generative AI industry may be valued at $1.3 trillion due to the need for generative AI products. The ChatGPT model is trained using NVIDIA's A100 GPU chips. Rapidly evolving companies like OpenAI require more faster computers since they consume a lot of data for things like training massive language models. As these systems learn and develop with more data, the need for GPUs will only increase. 3. The evolving realm of XR and the metaverse through its Omniverse platform, NVIDIA has contributed to the metaverse, as well as the virtual and augmented reality landscapes. NVIDIA provides 3D modeling tools to facilitate the effective streaming of extended reality, XR, material. The need for NVIDIA chips to power the metaverse is growing along with it. Businesses are using XR programs to build training virtual worlds. NVIDIA's graphics section also has a sizable customer base in the gaming industry. As more games go to the cloud and away from the console, video games require more powerful cards to run the high-resolution visuals. Video games run faster and with greater resolution thanks to NVIDIA's gaming GPUs, including the GeForce RTX 4070. 4. Placement strategy. A significant portion of the cryptocurrency market is occupied by NVIDIA. Its cards are used by miners to mine tokens, which takes a lot of electricity. As cryptocurrencies gained popularity, NVIDIA's cards saw an unprecedented demand. Even if the majority of the data centers that support generative AI are powered by NVIDIA's processors, there may still be some obstacles to overcome, such as competition from tech giants who want to produce their own AI chips, economic uncertainty, and increased rivalry. The market for generative AI is anticipated to keep expanding, but new laws and regulations may be implemented that could have an impact on NVIDIA's AI chips. Since a significant portion of NVIDIA's data center sales came from China, the U.S. trade limitations on China's cutting-edge semiconductors are also having an effect on the company's growth. Other rivals are now selling comparable processors, such AMD's Instinct MI200 family of GPU accelerators, as a result of NVIDIA's seeming rise. Additionally, Intel introduced a line of data center-specific 5th-generation Intel Xeon CPUs. Businesses might start looking at these other providers since they don't want to depend on just one, which could hinder NVIDIA's expansion. It's difficult to say if NVIDIA will keep growing at its current rate. NVIDIA has established a strong base in the AI industry, and its earnings will rise further if the generative AI business expands as anticipated. However, the amount of market share that NVIDIA's rivals will capture is uncertain. Despite growing competition, NVIDIA maintains a significant market share thanks to the recent announcement of its H200 computing platform. Although they use NVIDIA chips, cloud providers like Amazon, Google, and Microsoft have created AI processors. The potential to restrict sales of its cutting-edge AI chips to specific nations in the name of national security is another challenge NVIDIA faces. The market is changing rapidly. New vendors are being created to suit business needs as a result of enterprises' desire to deploy generative AI. The market for generative AI in business will also be altered by new domains like security and compliance. The need for AI infrastructure is high in NVIDIA's data center business, which is a major contributor to its success. Nearly 87% of NVIDIA's income came from sales of data centers. Other large tech firms like Google, Microsoft, and Meta have also reported higher AI investment in their earnings reports and are still investing in the technology. This demonstrates that NVIDIA is not necessarily doing poorly even if its stock growth is slower than it used to be. It continues to expand, and there is still a high demand for its goods. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Today's interesting because NVIDIA is doing well, but the rest of the semis are actually struggling, and the stocks is lower. What explains that?
Yes, Kelly, I think, this week we had the start of earnings. We had one very tough report from ASML. Then we had a very strong report from TSMC. Next week, we will have a number of other earnings reports from semiconductor companies. And the challenge the industry is facing is that this, one shiny area of AI is doing extremely well, but it is less than 20% of the overall industry. Whereas the rest of the industry, which has to do with industrial and automotive and PC and smartphone demand, that is just not doing as well. So I think it's possible that investors are taking a wait and see attitude before we get into the heart of this earnings season. So I think it's that kind of very normal earnings volatility that we usually see.
Yeah.
How wide and deep is the NVIDIA moat?
Sure. So what I think AI is telling us is that it is not just good enough to be a chip maker, right? That you need to make sure that you can scale these chips across a system, that you have software that can be optimized to deliver the best computational performance, that you're taking care of all the energy, right, and the power requirements, that you're working at scale with the supply chain in Asia, and then importantly, that you're working with an enterprise ecosystem. A few days ago, we saw NVIDIA signing the relationship with Accenture, who will train thousands of people to go and deploy NVIDIA-based systems. So I think it takes that end-to-end knowledge, and only one company today is able to deliver that. And this is not something you overcome in a day or a year or 2 or 3 years, because NVIDIA has been investing in this kind of silicon and software right from the days when they were just a gaming company. Their core operating system called CUDA came out over a dozen years ago. So that's the kind of advantage and lead that they have built, both in terms of their early investments in software and today their scale and incumbency and partnerships with a number of these enterprise software companies and consulting companies.
Have you been monitoring the stock of NVIDIA? With the stock up 16.2% in the last month, shares have been fluctuating. The previous session saw the stock reach a new 52-week high of $140.89. Compared to the computer and technology sector's 26.5% gain and the semiconductor general industry's 124.7% return since the year began, NVIDIA has increased by 176.5%. Since it hasn't fallen short of our earnings consensus estimate in any of the previous 4 quarters, the stock has a strong track record of positive earnings surprises. In contrast to the consensus estimate of $0.64, NVIDIA posted an EPS of $0.68 in its most recent earnings report, which was released on August 28, 2024. With $124.66 billion in revenue for the current fiscal year, NVIDIA is predicted to report earnings of $2.81 per share. This is a change in EPS of 116.15% on a change in revenues of 104.63%. The corporation is anticipated to generate $174.35 billion in revenue and earn $3.73 per share in the upcoming fiscal year. This indicates a 32.75% and 39.86% change, respectively, from the previous year. Even if NVIDIA is currently at a 52-week high, what does the stock's future hold? Examining valuation metrics to ascertain whether the company is due for a decline from this level is a crucial component of this topic. In the value, growth, and momentum categories, these styles are represented by grades ranging from A to F. Additionally, there is a combined VGM score. The purpose of the style scores is to assist investors in selecting the best-ranked stocks according to their own investing preferences. The value score for NVIDIA is F. The business has a VGM score of B since the stock has growth and momentum scores of A and B, respectively. The company is presently trading at 48.7x current fiscal year EPS projections, which is higher than the peer industry average of 24.7x, according to its value breakdown. The company is presently trading at 110.4x on a trailing cash flow basis, which is higher than the average of 11x for its peer group. The stock also has a P/E ratio of 1.17. From a value standpoint, this is insufficient to place the company in the upper echelons of all the equities we cover. NVIDIA has undoubtedly benefited the most from the artificial intelligence, AI, explosion. Shortly after ChatGPT was introduced in early 2023, the market capitalization of the AI chip stock increased by an astounding $3 trillion. However, there was an unexpected rotation out of NVIDIA stock over the first half of the year. The AI stock was sold by several wealthy investors who had profited from the firm's early advances, claiming that there were greater prospects elsewhere. Before deciding whether to buy, sell, or hold a stock, investors frequently consult Wall Street analysts' advice. Although the price of a company is frequently impacted by media stories regarding rating changes made by these sell-side or brokerage firm analysts, do they actually matter? Before we talk about the validity of brokerage recommendations and how to take advantage of them, let's see what these Wall Street titans have to say about NVIDIA. Based on the actual recommendations, buy, hold, sell, etc., issued by 42 brokerage firms, NVIDIA now has an average brokerage recommendation, ABR, of 1.24 on a scale of 1 to 5, strong buy to strong sell. The range between strong buy and buy is roughly represented by an ABR of 1.24. Out of the 42 suggestions derived from the current ABR, 2 are buy and 36 are strong buys. Of all the recommendations, 85.7% are strong buys, while 4.8% are buys. Even though the ABR recommends purchasing NVIDIA, it might not be prudent to base your investing choice only on this information. Numerous studies have demonstrated that brokerage recommendations are only partially or never successful in helping investors choose equities with the best potential for price growth. Do you want to know why? Brokerage firms' inherent interest in a stock they cover frequently causes its analysts to rate it with a significant positive bias. According to our data, brokerage companies offer 5 strong buy recommendations for every strong sell advice.